Altria.
So Altria is based out of Richmond, Virginia. It's the quintessential sin stock. It operates anywhere from tobacco, alcohol, and is working very hard to get better acquisitions into other nicotine products and marijuana. Its roots trace back to 1835, and this mature company is a dividend king and has growth potential and a significant competitive advantage over all other tobacco for its diversification. Here's a quick look at our agenda. Much of that. So this is Altria's main objective, taken directly from the company website. Responsibly lead the transition of adult smokers to a smoke-free future. Millions of smokers right now want to change from the harmful cigarettes, and Altria is going to be the one leading the charge into a safer alternatives. Diversity and brand loyalty is what's going to separate Altria from all the other tobacco companies. It shows how the leadership is willing and able to change based on the public's needs and desires. It can force itself into new markets because of its free cash flow and its size. So here we have our Chief Executive Officer. He's been with various roles in Altria since 1994. He's a fairly younger leader at 51 in an older industry. He's on the lower third of the rest of the board as far as age. But I think for how much time he's spent here, I think he will be a good leader to change the old. So here's a quick look into our operating companies. There's a lot going on here. Philip Morris and U.S. Smokeless Tobacco. Those charts represent the market share that Altria's brands have in the various categories of cigarettes and smokeless tobacco products. As you can see, this is very dominant. I mean, you guys all know the brands Marlboro, Colt, Copenhagen. These are all very common brands. Down and to the left, we have John Middleton. This is known for its Black and Mild cigars, which its premium cigars have had just a 3% gain in Q3 alone. Helix Innovations, which is one of their new additions to Altria. They are heading more and focusing into heated tobacco stick products, which are not yet approved in the United States, but they are working on. We'll get more into that later. They also have nicotine pouches. And then we have Philip Morris Capital Corporation. This is a smaller one. This is a portfolio of leased assets like aircraft, power plants, and other various real estate. They have a lot of strategic investments as well, just to add to their already strong asset sheet. We have a 10% stake in AB InBev with brands that we all know and love, such as Budweiser, Stella Artois, Corona, Michelob, and Modelo. Kronos, this is where also great growth opportunity is. Based out of Toronto, Canada, it is a leading global cannabis company. And not only, in addition to Kronos, Altria has also added more cannabis tech recently by acquiring some patented marijuana vaporizers, and recently filed for their own patents and other various weed tech devices. So this is where one of their blunders of going into putting themselves into these new fast-growing markets. Juul got in trouble for appealing to minors in their advertisements. They acquired a 35% economic interest for $12.8 billion in 2018. As of February 2022, that stake is now valued at $1.7 billion. Now I need to make sure that you guys know Juul does not impact the cash flow of Altria whatsoever. It is a minority owner. Your dividends are safe. Your share buybacks are safe. One thing that could be something to hold on to with Juul is in September 2020, all e-cigarette manufacturers had to submit PMTA applications, pre-market tobacco product applications. Those are sent to the FDA. FDA has made it through 99% of the applications, but some of the larger players, they waited for those people to do that last. PMTA essentially is just proving to the FDA that there is good intentions behind your product. It is to show that you are not trying to lead people into smoking, you're trying to take them away from smoking. So Juul is one of the last people, obviously, to be checked because they're the largest. Jewel competitors such as British American Tobacco, Japan Tobacco, and Enjoy have all seen approvals. So there is some light at the end of the tunnel. They did opt out of the non-compete obligation in Q3. So Altria will be able to acquire and invest in more e-cigarette companies and brands and create their own. To keep on with the trend of their smoke-free partnership, or smoke-free trend, they partnered with JT. They will collaborate and develop global commercialization of smoke-free products. Both parties will combine their scientific and regulatory expertise to jointly prepare PMTA filings for the latest version of HTS products. That product right there, the Plume X, was released in Japan. Since the introduction, JT has doubled its share of the Japanese HTS market just based on that one product, which is the hyper growth that Altria can offer, even though it is a mature company. HTS products are not available in the United States yet because they have not gone through the PMTA application process yet. They are looking to have them jointly filed by the first half of 2025. Another crazy hyper grower in Altria is On. From Q2 to Q3, there was an increase of 68% shipping volume. They recently have implemented loyalty rewards to continue creating loyalty to the Altria brand in general. And this On is just another example of Altria can and will continue to dominate and disrupt the market of anything new that's coming. Nothing will wipe out Altria. Altria will put its hand in whatever is needed. Here's segmented sales. As you can see, despite the efforts of trying to go smokeless, cigarettes are still a major player in Altria's financial. Luckily, despite declining cigarette use, Altria has massive pricing power in its dominant brands because they can. Altria's diversification of assets prepares it to go into whatever direction it needs to go to maximize value for shareholders. So, here's just a few things I picked out of the financials. Sales and income growth is relatively flat, which honestly, for declining smoking rates and being such a mature company, I think this is completely fine. I think with the growth potential earlier in cannabis and nicotine products, this is completely okay. And as we still have pricing power despite the declining smoking rates. And the free cash flow is definitely increasing, and that will be used for our dividends and share repurchases. And I'll go into more of that later, but it's just more acquisitions, more power. Here's a quick debt overview. That big line, that's 2032 and on. So we have no year where debt is heavily condensed in one area. Moody's and S&P both consider Altria stock stable. There's no lopsided distribution. There's not concern for the debts. Here's a 2-year performance. As you can see, it has outperformed the S&P 500. Year to date, it is down 2.5%. The blue line is Altria. The big drop is from the Jewel lawsuits. And a little quick fun fact is $1 invested in Altria in 1968 is now $6,638 by 2015 with dividends reinvested, or 663,700% return, which is kind of sweet. So here's a pure analysis. What we like about Altria is we have high profit margins. We also have a high dividend, and the PE is a little bit higher compared to these smaller players, but that's completely fine again because this is a mature business. My investment thesis, it has the most recognizable and profitable nicotine consumption brands in the United States. It is being well diversified for the future. It has incredibly powerful, strong pricing power. It has dividend and share repurchases. Altria has increased its dividend for 53 years and it's done it 57 times. This is putting cash and value into the shareholders' hands through purchases and share buybacks. Just in Q3, they repurchased 8.5 million shares alone. And the economic moat is especially critical during the high inflation times. So I came up with a valuation of $54.52. I came to that price by taking the price to free cash flow 5-year average times the free cash flow minus the annual dividend for this year. I mean, this is the assumptions. These are very conservative estimates based on sales and free cash flow remaining relatively flat. That peak that you see earlier in the year, that was at $57. I believe our portfolio should buy 10 shares. This is a defensive play. This is very conservative boomer investing during high inflation times. Absolutely not a double your money play, but I believe the price target is definitely plausible given the recent acquisitions and sales growth of a mature company that treats its shareholders tremendously well through dividends and share buybacks.
Can you go back to valuation 1 second? Okay, so you have a price target of $54.52.
Yep.
That is coming from these two models?
It is coming from the top number of the price to free cash flow 5-year average times free cash flow minus the annual dividend.
What is the second one, the 5606?
That is the price to sales 5-year average times the sales per share.
But you're not using that one?
No, I'm using the top one minus the annual dividend.
Okay. All right, thank you.
Could you go back? How long until they are going to be, or how far in the process are they for FDA approval
Of which product?
of their smoke-free product?
Oh, the HDS. Okay, so they're gonna be, they have plans to have these filed by 2015, the end of 2015.
End of 2050?
15
Okay.
that's just submitted to the FDA. Obviously, those times can vary, especially with such a major player as Altria, and especially with a product that is as influential in other countries.
Okay. Because sorry, follow-up question with that. So, I actually did a pitch on Philip Morris, which is the, Altria is the parent company.
Yes.
And it took about 4 years for that to get through the FDA approval process. It was like 1 million pages, literally. So how do you think that'll affect the stock overall in progressing through that? And how do you think that'll happen in the future with Juul kind of setting it back? Do you think that'll affect your valuation at all?
I think if Juul can get through the process, that's just brownie points. I think a lot of people have ultimately dismissed Juul. I mean, they've made it through 99% of the PMTA filings already, but it feels like a lot of people have dismissed it, and that's why I feel like that 20% drop was unjustified, because that was not 20% of Altria's business at all.
Thank you.
All right, give Jacob a